we're going to look into dominances right now, because this is way easier than people make it out to be. To understand when it's time to buy, to understand when the prices have dropped to their lows, or to understand when the shift is going to occur from Bitcoin to other tokens, other altcoins, right? A lot of it has simply to do with Bitcoin dominance. Now, you'll hear this so much. What is Bitcoin dominance? It's essentially the volume that Bitcoin has that's coming into Bitcoin in relation to the rest of the market. So of course, likewise, you can look at Ethereum dominance, you can look at stablecoin dominance. So the number one stablecoin that's used by volume currently is USDT, likely eventually to be USDC at some point in time. That might not necessarily happen anytime soon, and it may not actually happen at all if USDT persists, because the Asian market uses USDT so much. First of all, the world uses USDT so much, but Binance strongly essentially supports USDT as the main pairing with, for example, HBAR USDT, CRV USDT, Algo USDT, BTC USDT, ETH USDT. You'll see that all the time. Now, the reason why I mention USDC as being one that could rise up in the ranks is simply because of its connections, of course, with Coinbase, Circle, and such, so there's a high likelihood that USDC is going to continue its dominance and simply just grow and grow with increased volume. But for now, we're looking at USDT as the main stable coin that's used in pairings. So when we're looking at dominance, what do we want to understand? First of all, we want to understand, what does it mean when you have Bitcoin dominance up and then maybe Ethereum dominance down, Solana dominance down, USDT, USDC, essentially stablecoin, DAI and RLUSD and such. All of those could be down, but BTC dominance is up. That lets you know that people are getting more risk off, and they're getting out of altcoins and they're putting it into Bitcoin. The thing is, though, if you have a combination where you have BTC dominance up or BTCD up, and then you have your stable coins down, that's a sign that people are actually a little more risk on, but they're more risk on towards Bitcoin. So they're not putting their assets into stable coins, they're putting their assets into Bitcoin. Now, if you have a situation where you have your USDT dominance and USDC and your stable coins up, but your Bitcoin dominance is down and your Ethereum dominance is down, then you're in a situation where it's definitely risk off. People are actually selling their ETH, selling their Solana, selling their XRP, selling their Bitcoin into stablecoins. Again, stablecoin dominance goes up and other dominance goes down. That's a sign that people are selling, they're taking profits. So it's either risk off or profit taking, which is one and the same in some way. So, but the combination of these few, dynamics here makes for an interesting story. It paints a picture. You can clearly see what's happening in the market if on any given day you look at this and you say, okay, Bitcoin dominance is here, Ethereum dominance is there, and stablecoin dominance is there. And then of course you want to look at charts. We could share different formulas where you can look at the top 10 stablecoins or the top 10 blockchains. You can remove them from the formula so you can get a better idea of what the smaller tokens and the smaller blockchains are doing, right? Sometimes we do look at the top 10, sometimes we look at the top 5, sometimes we remove the top 5 just to get a better picture again. Because if you're calculating Solana and we're adding on Ethereum and we're also adding on XRP plus Cardano, those could be up, but that doesn't necessarily mean that the super small projects are going to be flying, So again, sometimes we have to balance it out and say, hey, let's remove the top 10 from this calculation and let's really get a picture of what's happening. So when you remove the top 10 or top 20 tokens, even the top 5 from your calculation, and you still see that that number is up, that's a really good sign that it's risk on. It's time to go. People are excited to buy into assets. Let's say it's TON or Telcoin or XDC or QNT. There are so many that could be named here. These things could actually go up and the dominance could be up while Bitcoin dominance is down. So how is it possible that the dominance of a super small blockchain relative to the size of, let's say, XRP is up in dominance, but Bitcoin is down. But also the price of Bitcoin is going up at the same time. It's a very interesting dynamic, but that goes to show you, watch this. The dominance of Bitcoin is falling, but the dominance of other assets are rising. That is a sign, but at the same time, Bitcoin's price is going up. That is a sign of a super bullish environment. Bitcoin's price is going up or staying stable. Its dominance is going down, while the other tokens and coins are going up in dominance and likely up in price. That's just to show you that Bitcoin is essentially a conduit. This tunnel, this funnel, this tube, this pipeline is essentially soaking in, allowing the liquidity to flow in from your bank account, essentially, into the crypto markets, and it's not being parked right in Bitcoin. It's going through Bitcoin, being swapped into other tokens, maybe USDC, USDT, and then being converted into other assets like Arweave and so on. And those increase in dominance because all the while, throughout the bear market and other parts of the market where it's uncertain, your dominance for your Arweaves or your other blockchains, your Pepe coin and this and that, those dominances are likely down for the most part. But as soon as they get a break, the dominance in those assets will rise really quickly. So this is why percentages are so much more powerful than just looking at numbers and adding on numbers. You want to look at the percentage because it gives you a clearer picture, and it shows you the magnitude, the volume, and maybe the consistency of the inflows. So speaking of inflows, we talk about ETFs. Most people are aware that there are ETFs for these blockchains, and you don't have to custody your own assets, which is very good depending on the lifestyle you live, and of course as well how much of these assets you hold. A lot of people don't necessarily want to hold hundreds of millions of dollars worth of assets on their own. They'll just become a target in a lot of ways, right? But the dominance idea, again, it paints a clear picture of the market, and it eliminates a lot of the guesswork as to when it's time to get into the market if you are in fact on the sidelines. Look at Bitcoin dominance and look at it compared to the Bitcoin price. If the Bitcoin price is falling and Bitcoin dominance is high, that is a very scary time, and you should probably get out of the market. Because let's break it down. What does it mean? If the dominance is rising but the price is falling, there's a chance that people are selling into Bitcoin and getting out of the market. Think about it. The price is falling, so that means they're selling Bitcoin, but the dominance is rising. That's a weird dynamic. It's just probably, I could see it in my head where people are actually getting out of the market and they're selling into Bitcoin, then exiting. Okay, let's look at a different scenario. The dominance is flat, but the price is rising. And what if at the same time other blockchains prices are also rising and their dominances are rising? Again, that's the same situation. It's a conduit. You've got essentially this tunnel, this pathway where Bitcoin is accepting a lot of liquidity, and its price doesn't really have to go so much higher or lower. The dominance in Bitcoin doesn't have to go higher or lower. It's kind of stable, but it's enough, it's sustainable, and it's enough to give momentum to the other tokens to actually find their shine. Now, there are other scenarios where you'll look at Ethereum dominance and then you'll look at stablecoin dominance, okay? Stablecoins, USDC, again, USDT are the biggest ones, RLUSD, DAI, things like that, right? If you look at these top 4 or even 5, if you add a couple more, I'm sure the numbers will increase over time, right? USD1, there are so many that will come, and they may not all last in terms of having accelerated levels of volume every month or every year. I think it's going to take time for some of these to dig in and find their niche. But if you look at a situation where the stablecoin dominance is kind of up and Ethereum dominance is up, that is a sign that money is moving on to Ethereum specifically. I didn't mention Solana, and we could talk about that a little bit, in XRP. I think it's because when XRP dominance is up, I don't necessarily expect it to last for such a long time. When Solana dominance is up, it could last, but the thing is, The reason why Ethereum dominance is so much more powerful and tells a bigger picture, paints a bigger picture than, let's say, XRP dominance being up, or Cardano dominance being up, or TRX dominance being up, as an example, Tron, or something of those nature, Solana being up. The reason why I don't look at those dominances as having such a powerful impact on the ecosystem, on the blockchain space, is because those blockchains don't have the strongest ecosystems around them. But when Ethereum dominance is up, we're going to get dominance in Chainlink going up and so many other tokens going up at the same time, because the volume from Ethereum feeds into a lot of other tokens, a lot of other chains like Base. You have tons of assets on Base. You have lots of volume on Base, lots of USDC volume on Base, by Coinbase. Right, you have Zora Chain, you have so many assets that are, metaverses, NFTs, gaming, so many blockchains that have been built, Arbitrum, as always, even Polygon. There's so many chains that have been built based on the Ethereum virtual machine, and based on, connecting themselves with the liquidity that is found on Ethereum, that as soon as Ethereum volume starts to go up and the dominance starts to go up and essentially the price starts to go up, once you start seeing that, and then you start seeing the Bitcoin dominance starting to fall, that they're in essentially at least the early phases of a bull run, but an altcoin cycle. Now, when I say altcoin cycle, that doesn't mean that every single asset is going to explode at the same time and give the same type of returns. What I do mean, however, more specifically, more accurately, is that you need to look at where the dominances are, or where the dominance is, and figure out to yourself, within that dominance, within that blockchain, what other tokens, what other asset types? Is it gaming? Is it AI? Is it decentralized physical infrastructure networks? Is it NFTs? Find out if that ecosystem actually has somewhere for this new volume to go, or this dominance to flow into. So when I look at something like Solana or XRP, I look at Solana, there's a lot of meme coins, there's a lot of NFTs and some gaming and such, but I don't necessarily feel but there are no real chains. Of course, there are chains built on Solana, but the narrative for Solana is not that, all these different chains connected. The narrative is that we don't need other chains. Well, okay, so then if we don't need other chains and it's so fast and so cheap, where is that volume going to? Where is that liquidity going to flow into, other than into the meme coins that are directly on Solana? It's not a bad thing to have that type of dynamic, or a lack of outlets or other places for the money to funnel into. But the volume that comes into Ethereum, for sure, 100%, has so many areas that need it, that want it. So many chains that are connected that will actually benefit from Ethereum's price action and benefit from Ethereum's volume and dominance. So keep an eye on the dominances. Catch you in the next one. Make sure to hit the link in the description and sign up.